Hi traders, you're welcome to my channel. I am OT Josh, and in this video I'm going to take trade based on this resistance level, and what I see here is also a trend line. A trend line is forming. A fake breakout occurred within this trend line. You can see this is the trend line. Yes, this is the trend line. You see, sorry, okay, this is the trend line here, and this is, it's like an ascending triangle. This is the first and the second touch of the trend line. This is the first and the second touch of this resistance. So right here you can do a put, but for this trend line I don't know if this is a break of the trend line or if this is a fake breakout from this trend line. I am yet to know, but from what I'm seeing, if we are going by the Bollinger Band, I think this is a breakout, because you can see this Bollinger Band is coming down. So we'll know after this, the close of this candle. So, but before then, let's wait and see how this candle is going to close. If it's closing below, then we are sure to go for our put trade. But if this is a fake breakout, then I think like something, if this candle is a fake breakout coming back here, then I think that the market will be going back up. Okay, so okay, I think the market will be coming down. No, it's no longer will be going back up, because if it were a fake breakout from this trend line, then this candle would not have been closing like this. It would have been closing much higher than this. It would have not been a red candle. So I think this is not a fake breakout. This is a breakout, a retracement, and this candle is the continuation candle. So this candle is going to close below my entry point. If this is your first time coming to my channel, please, I want you to subscribe. A big thank you to all of you who made this channel got to 200 and over 200 subscribers. So if this is your first time, please like this video, share this video with your friends, subscribe to this channel, and if you have any recommendation, leave your comments in the comment section. So let's see what's going on here. After this trade, I would like to explain thoroughly my reason behind the thinking behind me making this trade. So let me try and explain it for you now. I'll first of all remove the Bollinger Band so that we have a clear chart. Okay, so this is it. This is our chart. This is our clear chart. So I like to start from the very beginning. Okay, now looking at this chart now, what we have here was an uptrend. Let me show you. We had this uptrend. Oh, it was even a downtrend, kind of. Maybe a ranging market. So we had a major market that was ranging, but we had minor up and down swings. So now we get the full picture. I didn't zoom as far as that when I opened the chart. So what we had here was we had this resistance line. You see this line is called the resistance line, support line, not the resistance, sorry, pardon me, a support here, and we had a resistance here. We had a resistance here. Okay, so when we had this support and this resistance, what happened? We got a breakout from it. We had a breakout. Watch, so that you understand why I do certain things I do. We had a breakout and a retest. Now if you come to the ebook, if you come to the, excuse me, I'll be back soon. Now looking at the ebook, I'm going to show you something about this pattern here, this breakout pattern here. We can see at the beginning of this, I talked about balanced area. Okay, this is the balanced area. In this case, this is the balanced area, and you see this candlestick, here, this breakout candle is what we have here. So after the balanced area, this is a balanced area whereby we have a resistance upward, a support downward, a trading range. The price is balanced at this point. Now after this point, the price broke out. As a trader, when you get to this part of the market, forget about this breakout. Breakout is a signal. How do we take advantage of this breakout? Like I told you, for those of you who have the complete full version of the ebook, I told you, whenever there is a breakout, this is not for you to trade. The breakout is not for you to trade. Sometimes for those who are who are more risk tolerant, you might take the trade. But if you want to be more less risks, if you want to use less risks in your trade, what you have to do when you see the breakout is to prepare for the next time price will come to that area. For instance, the market has given you this breakout area as a place where price will come back and react. Now after this, you come back now to what? The change of what? Polarity. Now this is where we have it. This is for downtrend. Now this is for uptrend. Now if you look at this pattern now, breakout, retest, and a continuation. If you look at this is exactly what we have here. Now these are candlestick patterns. I can't predict how the candlestick will turn out to be. No, I can't do that. But if you look clearly now, this is what we have: a balanced area, a change of polarity. Now this is the change of polarity. You understand? You see, price forms as a resistance in an uptrend. Price breakout of resistance, recent broken resistance now act as support for the continuation of the uptrend. Recent broken resistance now act as support for the continuation, which is this candle is a call. Simple. If you do your call trade, 3 minutes, you are in the money. 1 minute, you are in the money. So this is how we should be looking at these trades. Now, why I took this particular trade, I will be coming to that, but let's go on. I will come into that now. So that is that for the breakout. Now watch this. When this price, okay, I'm going to tell you something about a market condition. Now this is the condition the market sets for us to trade. This is the condition. Do your put trade here, put trade here, call trade, put trade. Now the market has set this condition for us, but as you can see, when price came to after this candle, price broke out. Immediately price broke out. Please don't be fixated on a certain idea. It's not good. Make sure you learn how to change your mind. The market now tells us that this condition is over. It is over. Don't try to do your put. The breakout has told you the condition is over. Now you have to look for a new condition. Now when the market came back here to retest, this is what the new condition now gives us. A change of polarity is a new market condition. Is a new condition the market is giving to us to trade. After you do your trade for the change of polarity, change your mind and wait for a new condition. And when I came to my chart, I saw the condition, and that was what? This resistance. There was a high here. Why did I say there was a high? Because this is the first time within this time period when price was coming to this area. This was the highest point. This is now the latest high. A high, a retest of the high to form another resistance just like this. But in this case, the price did not break with like this candle broke. The price stopped and this red candle came. So put trade. Immediately you do your put trade here, what happens? Change your mind. Or when you do your put trade, you don't need to change your mind. Observe. Now what I observed, why I did that, let's get to that. I now saw a condition here. This was the condition I saw. This was the exact market condition I saw. And I think in the beginning of the video I talked about the ascending triangle. Now when I saw this market condition, this is forming a trend line, because we have a first touch of the trend line, the second touch of the trend line, we now have a trend line. So in a trend line, you do your put trade, your call trade from this bottom. But after I did this trade, I had to observe this candlestick broke out, and I was saying it was a fake breakout. Now if assuming this candlestick closed inside the trend line, then I'll continue, but it did not. So if this candlestick did not close inside this trend line, because this is the trend line, I just want to make this thing clear. This is the trend line. Okay, this is the trend line. Ascending series of higher highs and higher lows formed an upward trend line. Higher highs, look at the highs. First high, second high is higher than the first high. Higher lows, this is the low, this is a higher low. It forms a trend line. Now, like I say, this is not a complete ebook. I just use this to teach. If you want to get the ebook, my email, the link is at the description. You can get it from there, and it's very important you do. Okay, but let's go back. Let me show you something. Now, at this point, we had a breakout. So I was thinking, I wasn't trading, I wasn't getting ready to trade. I was in this state of mind. I was like those traders who are not buying, who are not selling, they are just watching. So you see how quickly you should be able to change your mind when you trade. Now I'm now watching. So what I saw next was that this candlestick that I thought would have been a breakout did not end up as a breakout, but rather it retested this trend line and created a bearish candle. So what did I do next? I was telling you, if this candle closed like this, I'll do like this. If this candle close, why? Because I was seeing what? Another change of polarity. I was seeing another change of polarity. I was seeing this is what I was seeing. Now this candlestick, it does not have to appear with this format. What you need is to get the idea behind it. See, the change of polarity was happening here. After this, you had this breakout, retest, and a continuation. So I saw this change of polarity and I did the put. Now, why was I even sure that this was a change of polarity? I told you before that this is a trend line. This is a trend line, and if you have the complete ebook and you read about the psychology and the action behind the trend line, you will find out that in a trend line, when this candlestick breaks, when this huge candlestick breaks, let me show you, when this candlestick breaks, it signifies a change in the market direction. So a change in the market direction plus a change of polarity gives you more reason to do the put trade. So this is how you should think. This is how you should analyze the market, not just looking at candlestick patterns as if candlestick patterns are God. You need volume, you need price analysis. Now I removed the EMA. There is a reason why I removed the EMA. There is no time. I would have loved to show you what the EMA can help us do in such cases, because the EMA, the Bollinger Band, sorry, not the EMA, the Bollinger Band shows relative high and lows in the market. So if you look at this trade I did, from here the market created a green candle, but it came back here. It's supposed to create a much bigger green candle. So I knew that this wasn't a low. If this were a real low, if this low it was true, the candle would have been green. So it wasn't, it was still red, so I went with the put. I hope you guys have understood what I just explained. I'm doing my best to explain these things and these concepts. You can see what's going on here now. This same change of polarity is coming to form a resistance now, because after the change of polarity, I told you, change your mind, a new market condition has been formed. So this is a high, a retest of a high. So after now, this would go down, because this is a high, a resistance, and a confirmation of the resistance. As you can see, the price will go down. If this is your first time in my channel, please subscribe to my channel. If you have not gotten the ebook and you are interested in getting the ebook, go to the description. Don't waste your time, don't waste your money, don't waste your time in clubs and all of these things. Invest in your financial future. The time is now. So until next time, my friends, take care and bye bye.